We start with Apple falling in the after-hour session, down nearly 2% as President Trump pounds the table on more Chinese tariffs. Let's go out to Eamon Javers in Washington for more on this developing story. Eamon.
Yeah, Melissa, that's right. The president gave an interview to the Wall Street Journal that was published earlier this afternoon. And in that interview, he talked about the possibility of adding additional tariffs on Chinese products coming into the United States if he doesn't get a deal with the Chinese, which is what he said in the past. But he also specifically talked about imported iPhones and laptops coming in from China. And this is the quote that he gave, saying that it depends on whether he's going to put additional tariffs on. He says it depends on what the rate is. I mean, I can make it 10%, and people could stand that very easily. So the president there raising specifically the possibility of a 10% tariff on imported technology products. That obviously has some bearing on Apple products and possibly some of their competitors as well. I asked the president as he was leaving the White House this afternoon, getting on board Marine One, I asked him about the possibility of a deal with Xi Jinping in Argentina later this week. Here's what the president told me.
We have a good relationship. What do you think it is? What the bottom line is? China has to treat us fairly. They haven't been. They have to treat us fairly. Mr. President.
So the president there is saying that China has to treat the United States fairly, not saying specifically, and this is sort of the $64 trillion question here, not saying specifically what the United States would accept in terms of a counteroffer from the Chinese. So it's not clear what specifically is on the table here going into the G20. A lot of loose ends. We expect to hear more from the White House about what they expect to accomplish possibly tomorrow at this meeting, which is going to take place at the end of this week. But a whole lot riding now in that session where we do expect the president and Xi Jinping to meet face-to-face. Melissa?
So, Eamon, the president says that he expects to move ahead with the boost on China tariffs to 25%. So those are the tariffs currently in place, currently at 10%, which are scheduled to move to 25% come January 1st.
Right.
And then the Apple tariffs of potentially 10%, that's in the other round of tariffs, which would be basically a tax on the remaining goods imported from China, correct?
Right. And the way the quote reads is a little bit difficult, right? Because he expects the tariffs to go in place if he doesn't get to a deal, right? So it's expressed conditionally, and that's always how the president has talked about this. So I don't think there's a lot here in this Wall Street Journal interview that's dramatically different from what the president has said in the past. He has always said that he could move forward with additional tariffs, so an additional $267 billion in tariffs that have not been put in place yet on the remainder of Chinese imports that are not already facing the prospect of tariffs. That's what he's said consistently, and I believe if you read this carefully, read these quotes carefully, that's what he's suggesting here. Just continuing to lay out the prospect, though, of these tariffs on the eve of this big summit is being read by some as an additional effort to bring the Chinese to the table.
All right, Eamon, thank you. Eamon Javers at the White House with the latest on this developing story. And this is just the latest blow to the tech giant. Even before the headlines, the stock had barely managed to rally today, still sitting firmly in bear market territory. It's been actually underperforming the indices for a few sessions now. So are the stock's best days behind it? Time to ditch Apple. Has it become the new poster child, the question that you posited, of the trade wars at this point?
No, I don't think the best days are, in terms of the stock, I don't think the best days are behind it at all. In terms of the headlines for the company, maybe the company's transitioning and we're not going to get these great iPhone numbers, these great iPad numbers. Maybe the company's moving on to becoming a different Apple. Maybe the fact that they're not talking about hardware anymore is in fact a good thing, and they're moving more towards a service company. So in that regard, maybe the headlines won't be as good. But in terms of the stock, I don't think the best days are behind it at all. But that being said, you know, I power pitched this stock when it was 195, and here we are at 171.5 now. So I've been dead wrong.
It's a fast
pitch, power pitch.
And that may be
so now where's the next level? So if you look where it basically bottomed out in November, 163, give or take. The previous spring, 163 or so. So maybe that's where the bullseye is next. But in terms of the best days being behind it, I don't think so at all.
Karen?
Yeah, I mean, this rhetoric that's this last, percent or so down, I think is just that. It's just positioning in front of the trade negotiations, which I don't think we will have any kind of resolution by the end of this week. Maybe. My hope is that we're going to continue to talk. We've made good progress. We hope to continue to make progress. And then if we do, then we won't put in the additional tariffs. As to Apple, I mean, clearly I should have sold it 10, 12, 14% ago, but looking at it here as if I'd never owned it and I came to it today, I still would like it. I still would buy it here. Could be the poster child for a while. That's okay.
Yeah, again, poster child for the trade conflict, absolutely not. Apple's problems right now are Apple's problems. It's a transition, if you want to call it, away from a hardware company to a software company. By the way, last quarter, that seemed pretty exciting. This past quarter, not so much, especially as they gave guidance that wasn't so great. Yes, they told us that emerging markets were looking weaker. So some of that was certainly baked into this number. But Apple's peak to trough 27% move in about 35 sessions, by the way, very, very extreme. Sadly, I think is more indicative of what's going on in the tech sector and a sell-off that's a broader market proxy. So I don't think that if you suddenly want to attach these guys to trade, there's actually a lot more the stock could do. I don't think you're supposed to do that here, but that would be the case.
Well, I think it's fair to say that this was going to be the last battle fought in this trade war with China. When you think about it, they make all those iPhones there. Foxconn, who's their major partner in assembly, they produce, millions and millions of these a week, and they send them back here. So, it hurts China from the standpoint that they have to put a lot of these workers, on hold. But they were already doing that. That's what the guidance told us about this. So it comes at a really bad time. I think it's really important to remember that 10% tariff on iPhone that's coming back into America is a tax on U.S. consumers at a time where we know the U.S. consumer is doing pretty well. We know 2/3 of our GDP comes from U.S. consumer consumption, right? But I don't really know how it hurts the Chinese at any point. They've been able to mobilize millions of workers in these cities, in these Foxconn plants, and they don't really care a whole heck of a lot about those workers. Remember they used to jump out of the windows because they didn't like making the iPhones a few years ago?
I don't remember that. But, I guess the question is Apple any different than any other manufacturer who's got subcomponents that are being made in Asia, certainly China, other parts of Asia?
So let me tell you what the biggest difference is that they have all the profitability in the entire smartphone market. They have less than 50% of the global market share, and this is the bear case that's been going on for years and years as Android's been moving along on much lower priced phones in emerging markets where all the growth is, because at some point the developed world got massively
then it's not
saturated.
a trade war stock.
Well, no, but what I'm saying is
because what you're saying is Apple's problems were already well underway because Android is the preferred operating system, the more affordable operating system.
I think right now in the last month or two, it's the spark that lit the fuse. I think then we're seeing that in a lot.
We can split them up right now.
I was waiting for the split
But I do
screen.
think
I
that
didn't
you're
see.
more on the same page than not on the same page at this point on this debate, unfortunately. So you can be in one giant box, maybe together, but maybe not in split boxes. But to get back to the 10% tariffs, either the U.S. consumer pays for that in terms of what we pay for iPhones, or Apple pays for that, or the suppliers pay for it. The suppliers we've already seen have already undergone a lot of pain. So that would be the worst thing for all of the Apple suppliers, the chip companies, et cetera. If Apple pays for it, that means that they're absorbing it in their margin. If we pay for it, are we going to pay $10,200 for a new iPhone? Are we
1,000?
1,000, yeah. Are we willing to pay $1,200?
Among the three, right? Maybe everybody takes a little bit of pain. I don't know. I think that Apple will take some of the pain if this comes to pass. If it does, I think they will. I think that Dan, you for a while said they're running up against the absolute ceiling of the price point for their customer.
Yeah.
You think that's the case?
But I think the news last month,
the higher ASP, though, was a defining part of that last earnings number, no?
Yeah, and it is. And I got to tell you, but what's also defining about it is that they're going to start reporting or stop reporting units. They're also seeing a greater uptake on their iPhone upgrade program. So they're starting to think about this as more of an ARPU, an average revenue per user, as they're layering on more services. So you're thinking about it as, okay, how much does it cost for me a month to have my Apple Pay, my music, my soon-to-be music TV subscription, and then renting the hardware? And that's the way they're thinking.
But are we any different, Dan, right now with Apple in terms of that story than we were 6 months ago when suddenly that was actually a great tailwind?
At all.
I mean, nothing has happened. If anything, it's a better story because arguably these guys are pushing into value-added products, higher margin products,
they have, because
and they've got momentum.
They've massively boosted their ASPs at a time that we know that the demand in the developed world has plateaued. If anything, it's actually...
Wouldn't that be a negative event, though? In other words, you make it sound like they're boosting ASPs to counteract falling demand to mitigate it in some way. I would argue that would be one of the dumbest things that they could do. And in fact, these guys have a market that's willing to pay a higher ASP.